Okay, you're on.
I'm on, okay. Fantastic. Right, hello everybody. Hello.
Oh, hey.
Thanks Dave. I recognise most people here, it's great to see everybody again, and thanks to Ian and Ron for inviting me once again. And I want to give you an update on what has happened with EdgeRater over the last, well, since we last met in March this year. So I'm going to do a little introduction for those of you who don't know me. So who hasn't seen me before, who doesn't know who I am? One, two, three people. Okay. So basically, I write a program called EdgeRater, and you've probably heard people refer to it so far over the weekend. So I'll talk a little bit about that, but I really want to get into the new updates and things that have happened since March this year, when we were here last. There's been quite a lot of improvements to functionality in the templates. There's been a whole new section added on seasonality. There's group rotation, which is something you could always do in the program, but it's been vastly improved now. And then the thing that you don't have on your computer, but I'll show you today, and it's actually going to be released on, Tuesday, I'm going to say Tuesday, which is about generating indexes automatically from HGSI. So, and then of course we're going to talk about Ian's go-to templates. You've heard some about that yesterday and today. Percent beat buckets and market summary, and I'll talk about, we'll go through that, and Ian will hopefully chime in and tell you some things about those too. Okay. So I am, as I said, I've been working in software for basically my career. I'm a software developer. But I did quit Microsoft and work on my program, EdgeRater, and ETF Trading Manual, which is kind of a subset of EdgeRater, but it's to do with one specific set of trading strategies that were published by Larry Connors, called the High Probability ETF Trading Strategies. But all of those are included in the EdgeRater program too. When I was here last time, I talked about my time at Microsoft, and I just bring this slide up because I was at Microsoft at the company store 2 days ago, and I mentioned before that you see on the left-hand side there's the 5-year service award, which I got for being there 5 years. And I mentioned before that if you're there for 10 years, the awards get bigger, and then 15, 20, 25. I was at the company store 2 days ago, and they have a showcase with all of the awards in. So I took a picture of that. And you can see the lowly 5-year award at the bottom. And you go up, and if you're there for 25 years, you get the huge. I guess at that time you had a house big enough to put the 25-year award in. So the original idea of the program, and I'll give you an update on the results of this particular strategy, was to kind of, everyone talks about signals and bars and candlesticks and certain patterns that you're looking for. And so obviously doing back testing was being a software developer, that was something I was interested in finding out. And there are programs to let you find out information about back testing like TradeStation and Metastock and AmiBroker and all those kinds of things. But there wasn't really a program that would help me to find this particular strategy or group of strategies that I was interested in, which was all to do with relative strength. And so my original kind of question that I wanted to answer was really to find out what would happen, just theoretically, if you looked at the stock market every day, and you, at the end of the day, you found that the 10 biggest percentage gaining stocks, and you bought them, and then you sold them the next day. And you did that every day forever. You know, is that a good strategy, or is that a bad strategy? So I developed basically EdgeRater to kind of show me that. It's really developed since then, but it easily shows you the answer to this question. And so just as a kind of a getting started thing, let's most people will know this, as I've talked about it before, but if you had to guess at the answer to this question, you find the 10 biggest gaining stocks, percentage gaining stocks every day, and you buy them at the close of that day, and then you sell them the following day. There are two choices. You sell them at the open of the following day, so you're trying to take advantage of the gap, any gaps in the stock, or you sell them at the or you buy them the following open, right, and sell them the next close. So those are the two choices: buy at the close when they're the biggest gaining stock, sell them the next open, or buy them at the next open and sell them at that same close. So hands up if you think number one is a good strategy, and hands up if you think number two is a good strategy. Okay, and hands up if you didn't put your hand up. and it's okay not to put your hand up, because how are you going to know the answer to the question if you haven't done the back testing, right? That's what back testing is all about. Give you a flavor for whether strategies are going to be good or not. So it turns out that this is the answer if you buy at the close and sell at the next open. And this was the chart that I showed last October. And this was going from January of that year through to October that year. And this is your daily equity chart. It's basically placing $1,000 per trade into 10 stocks. So you start with $10,000, and you end up, in this case, with a profit of $12,000. So it's like plus 120%. Option number two ends up looking not quite as good. And in fact, if you had unlimited money that you could keep putting into that account, and you kept placing those $1,000 per trade, you would end up with a minus $17,000 account. So option number one looked much better.
So that is, to make money, then it has to gap open.
That's the only way that number one strategy makes money is in gaps. So since then, since last October, that may have been an anomaly, right, for the year, January through October of 2013. So then, just before this meeting, I ran the same test again from October of 2013 to October this year. And these are the results for the strategies for that period of time. So strategy number one, buy the close, sell next open, still looks good, up $11,000, so 110% in that strategy. Strategy number two, down $32,000. So, and that is a very tight-looking line. So if you are actually, a short-side trader, maybe that's a great strategy for shorting. However, these stocks, a lot of the stocks that appear in the list are very thinly traded. So if you're a gill type trader, you wouldn't probably be able to trade that. You'd be, shorting the whole float. But it was just this is back testing. It's one of the limitations of back testing is it's something you can do in a theoretical manner. It's not something that you can't really test the actual conditions at the time you did the trade. But it's great for giving you statistics.
Chris, weren't you trading that for a while?
Yeah, so after we met last year, then I decided to actually do a little variation on the strategy, because if you're trying to find 10 stocks and trade them every day, it's a lot of work. Inputting all the orders and everything. So I decided to just take the top two. And I did it from January, the first trading day of this year, and I just did it for 2 months. And it was actually quite a profitable strategy. But it was profitable in the first 4 weeks, and then it went down. So at the end of the 2 months, it was just about even. And for all the work that I put into it, I did it as a theoretical kind of thing. I was trading 100 shares in each. It was, nothing major. But it proved that, if you didn't have to worry about floats because you're only trading a small number of shares. It did prove that the concept sort of worked.
So you did this on 10 stocks?
I did it on 2. This test was on 10.
Right, so that will make a big difference.
It makes a difference. And actually, if you run this test on 2, the strategy actually works out to be a lot better. Funny enough, take the top 2 stocks.
So the top 2 would be the ones that made the biggest gain during
Correct.
the day?
Yeah. And actually, the way I was doing my scanning was I was just running the test using the NASDAQ, and I was just looking for the top 2 percentage gainers in the NASDAQ. I also had trouble because if you want to place a market on close order, you have to do it at least 15 minutes before the market closes. So oftentimes I was late, and then I'd have to trade, pick a time between 15 minutes and when the market closes to place that order. And what I found was actually during that time period, I would do a scan using my the intraday updates in EdgeRater. So I'd find the stocks that were the biggest gainers, choose my 2, and then place the trade. It may be like 10 minutes before the market closed, or 5 minutes. But what I found is there was actually a lot of gains during that time between placing the order and when the market closed. So I think it sort of boosted the strategy results.
Maybe other people are doing that too.
You know, yeah, out of everybody I've told, probably not that many actually.
So did you share this with Joe Morales? Is that why he's not taking the pocket to break out and he's letting plays?
I don't think he's heard about that. But with his amount of money, this would not be. You know, you'd have to be looking at much more liquid securities.
You may have read the same book you did.
Yeah. Well, and the most annoying trade that I made in this strategy was or the most annoying trade that I didn't actually manage to make in this strategy was 5 minutes before the market closed. I had the stock that I wanted to buy. I put my order in at the ask, so it should have been taken straight away, right? It wasn't taken for a couple of minutes, and then I got very suspicious about the whole thing, so I took the trade off. The following morning, that stock opened up double what it was. It would have been the best trade of the whole bunch. So, you know, I think maybe there's some kind of manipulation going. I'm not sure, but somebody knew something, I think.
What platform?
For trading, I'm using Thinkorswim.
Their excuses not to.
Yeah, you could. Yeah.
I have to think this way. I have Interactive Brokers and Pay Station. Interactive Brokers, Pay Station,
Right.
execution.
Yeah.
I put orders on both,
Uh-huh.
and Interactive Brokers will fill it with 2 seconds.
Right. Yeah, I kind of think Thinkorswim has gotten a little worse with their executions as well over the you know, since they had the new update in February or March this year. But I think things are improving. That's it's great software. I really like that software. Anyway, that was kind of like a little introduction. But today, like EdgeRater has grown from that initial idea into being able to do the original backtesting and scanning to the big thing today, which is trading templates. So what are trading templates? Well, look, it's the idea for me for putting templates together was to try and capture the expert ideas. You know, like Ian has great ideas with buckets and market breadth ideas. And what I wanted to do is be able to sort of take the information from Ian and apply that into a template so that anybody can just hit the run button and get the results that Ian looks for. That previously he may have had to spend several hours in going through the Excel data to compile that information. So I worked closely with Ian. They were the first templates that I put together. Since then, I've worked with Gil and Ron, Jeffrey, who's on the top right. The guy down here is George Lee. Who knows George Lee? Yeah, quite a lot of people, and other people who can remain anonymous. For instance, Sue McLaren and people like that. But you didn't hear me say that. Now, since March, so I already had, last time we met in March, the whole program of developing these templates had been going on for probably a year at that point. So we already had, every month I produce a new template. So I take somebody's idea, put it into a template. Every month I release a new one. So since March, there's been the April templates, which are all about seasonality. The historical seasonality. I also, in May, went into seasonality now, which is like what you should be looking at if you were interested in seasonality tomorrow, what you should be looking at trading, because it has good runs coming up. I worked with Jeffrey Scott, and I did a pullback in uptrend. We did retracements in a downtrend. And then I kind of had been looking a lot at linear regression analysis. So this wasn't something from anyone in particular, but it's just something that was something I was interested in, linear regression analysis, and so I put a template together on that. I really want to show you some of that today, because I think you can find some really good stocks in with that template. For instance, just to give you a kind of whet your appetite, you can do a scan and you can find out over whatever time period you choose which stocks have been going up, which are lower left to upper right. The best ones will come to the top of the list, best being it has the best slope from lower left to upper right. And then you can find the stocks that are trading at the lower end of their 2 standard deviations away from the center linear regression line. So that's, could be something, if you believe that the stock is going to continue going up, then that's a great way to find those stocks. In September, I introduced the multi-chart viewer. So rather than just looking at one chart, you can now put as many as you like, side by side, daily, weekly, monthly. And EdgeRater really is an end-of-day program, but it has the intraday update capability, which is kind of cool because it means in the middle of the day, you can press the intraday update button, and it will go to the market, and it will grab basically 15-minute delayed data, but it's free data, so it's not like a subscription, you have to pay for that data. And it will just apply that data as a last bar on top of the latest end-of-day update that you have. So people like that feature, and that is really how I was using the strategy about finding the biggest gaining stocks at the end of the day. And running a template is, I'm going to get into the demo in a minute, but running a template is as easy as basically 3 steps, 1, 2, 3. You select the template, you select a list that you want to run the template against, and you press run, and it's done. So let me get into the program, and let's just look at this. Oh. Let's forget that. Let's move on. that was final score.
That was final.
Yeah.
Pause here.
Yeah. That's not good, right? Okay. All right. So I mentioned a lot of things that happened, and if you have the program, and this is a free trial. If you don't have the program, you can download completely free the trial for 1 month and check it out. But you'll always see what's happened in the month because there's a new this month. It goes through the things that have been released, so you know exactly what's what. The first thing I want to show is the thing that nobody has right now, because this will actually feed into the seasonality that I want to do. So what is new on Tuesday when I say Tuesday, I get back like late Monday, so it may be Wednesday before this is released. But if you remember, one of the things that we talked about, or you may have heard me talk about before, was being able to do group rotation on industry groups and find out what groups are turning around and coming back into favor. So the way that you would do that in combination with High Growth Stock Investor was to export the industry groups into a metastock format, then import them into EdgeRater. And it sounds easy to do that, right? But Marilyn had trouble with it, not the only one either. Like many people had trouble with it, and I ended up writing out the steps required to do that. And it turned out to be something like 20 different steps required to go through that process. So realizing that most people had trouble with this, and also that most people wanted to do this every day, made me think about this template. And so the idea behind this is quite straightforward. But you'll know if you have your High Growth Stock Investor up and you say, look at the warehouse. Okay, the warehouse. If you look at the warehouse on all securities, and you look at, let's choose a view here, and I'm going to choose this is in your list. It's under, is it 01 and then 09, which is the archive view. Archive view basically has all fields that are in the database are then put into the warehouse. So if you scroll all the way to the right, you'll see there's lots and lots of data in here. So imagine if you save that information on the hard drive, that is how EdgeRater is aware of all these groups. So what you would do is you go File, and you say Save as HTML. I'll save it as all securities. And basically that step is done. Now, the rest is up to EdgeRater to work out all of the stocks, all of the groups, which stocks are in which group, build the indexes, the equal dollar weighted indexes, over a 10-year period, generate all that information, and put it in the program. Sounds like a lot of work, and there's a lot of processing going on, but for you, all you have to do is basically choose that file and then press run. And I'm going to do it, and we'll see how long it takes. It will take like 3 minutes or so.
How did you get the warehouse file there? I lost you there.
It's in your high growth. So we have 3 minutes now. I can tell you.
Yeah.
So you've got your warehouse. You choose your archive view, right, which is your O1.
Yeah.
Yeah, you got archive view. Then you go File, Save as HTML,
Okay.
and then you choose a location to save it to. You can save it anywhere. You just have to remember where,
Yeah.
because you'll need to point EdgeRater to that file.
It's not in EdgeRater, it stays in.
That file is a file on your hard drive, and you put it anywhere on the hard drive at all. Now, as EdgeRater sort of reads that file, you'll see the progress along the bottom here. What it's currently doing is it's going into the warehouse file. It's building 10 years of history for the whole amount of symbols that are in that file by extracting the information from HGSI. And once it's done that, it can then look at the file and say, what stocks are in which industry group, create the index for those industry groups, and then create a whole separate symbol list for that. So you'll see after it's finished doing the first step, which is building the snapshot, which is nearly done. And you'll notice also that there were only, if we go back to HGSI, there are only 3,271 securities because the archive view has a filter which only selects stocks that have that belong to an industry group. So if they're IPOs, they're not going to appear in this list. But
Do your data files have to go on the same folder as your application file?
no,
So they can be on separate drive?
yeah, you can put that file absolutely anywhere. You can put it in the cloud if you want. Except if you're Fred who doesn't like the cloud, then you wouldn't use that, right, Fred?
Chris, when I download these things, it generally has a default. Take 2 years of data.
Yeah. Yeah.
A longer period of time.
Yeah. So that was always the problem with doing the metastock export, right? Because there were two problems with that. First of all, we have to set HGSI to generate 10-year indexes, and then you had to set EdgeRater to also use 10 years worth of data. This completely solves that problem. It by default is going to generate 10-year indexes.
So it automatically.
Exactly.
Okay, great.
Chris, does that mean you need your data, that you need to tell EdgeRater to get this from HGSI?
All you do is you just basically tell EdgeRater where that warehouse file is. That is all you need to do. So you export the warehouse HTML file, you tell EdgeRater where it is, and then as you see here, it's actually finished, and it's telling you what lists it's built.
And then will you have to do that every day if you wanted an update copy?
Yeah, of course.
Chris, if I wanted to use, say, the latest ERG in a different template, can I pull it in where that's stored?
Sure. Yeah. So it doesn't matter as long as you point it to a HTML file, an HTML file. As long as that file has the industry groups in, and it won't be able to categorize things if the fields aren't there in the file. But so now it's finished. Now let's take a look in the drop-down list. You'll notice now I have warehouse indexes, industry, major industry, sector, and SIC code. So I'll select industry, and now I have 172 industry groups. That must be the number we currently have in HGSI. All right, and you'll notice if I click on the little edit thing, we'll see how much data we have for each of these. You've got from 2004 to 2014. And these are indexes that were built automatically by EdgeRater by getting that data. So, it's useful to have that information. It's useful to have, by the way, a side effect of doing all that is it's also generated a symbol list containing all of the symbols. And that's called the warehouse all securities, which also has 10 years of data in. We've also got the SIC code groups, so if you want to organize things by, it's a little finer organization than industry groups. And then sectors as well are in here, and there are only 10 sectors.
Chris, there's actually 177 groups, but some of those groups have such low volume, you don't pass the filter.
Okay, yeah, thanks.
That's what happens.
Yeah.
Pretty obscure groups.
Right. So doing that, making it a lot easier is good, obviously. But then the thing that you can do with this information, that's where it gets very interesting. And I've spent a lot of time over the last couple of months working on how to figure out what stocks are, or what groups, what industry groups are coming into favor. So let me show you that. We'll go to, in the Pro Tools category, there's something called Group Rotation Template. And I can, as long as I have the industry group, the industry indexes list selected, I can, with this group rotation template, I can choose a period that I want to see do the testing over. The testing is based on a percent change over that period of time, so it's going to rank things based on percent change. Right now it says 22 periods, so it's a 22-day percent change. I can change that over here to whatever you want. And then if I run this,
Is that day?
it's day, yeah. So 22 days is about one month of trading. Okay, so having run that, we'll now reveal the, in this dashboard worksheet, it's going to reveal the top 10 ranked indexes over that 22-day period. Also, it will show you the bottom 10 ranked, it will show you have the biggest rank change to the upside and downside, and it will also try and pick out the ones that have fastest acceleration. It's only showing on this page, which is a dashboard view, 10 stocks in each category, but each of the tabs below here, you'll see there's rank acceleration, rank change, average rank. They'll show you the whole list, so you don't have to, if you want to find something that's further down, which I'm going to talk about in a minute, is quite important for finding stocks that are sort of, or groups that are coming into favor, you would come into these worksheets here.
What is the difference between acceleration and rate of change?
Rate of change, well, technically it sounds like they're the same, right? Rate of change
Well, that's why
and acceleration.
Understand it.
Yeah. Well, so in here we're not talking about rate of change, we're just talking about the change. With the change, yeah. So I think it's the difference between velocity and acceleration. So change is your one-day change in rank, and acceleration is taking another derivative of that and trying to figure out which ones are accelerating the most.
Okay, so you would take, the change would go between today and 22 days ago.
Correct.
And the velocity has some algorithm that will determine.
I'll show you exactly what it is.
Okay, the slope.
Yeah. So the value whenever you run a template, it actually produces a Excel file, and there are various worksheets in this workbook, and the value sheet is right here, is telling you the actual percentage change over 22 days. And it's sorted by highest to lowest. So you can see that agricultural chemicals had a 7.1% change over 22 days. And then you've got the values listed in order. If you go to the percent rank sheet, it's basically the same ordering, but instead of giving it a value, it's giving it a percent. All right, so it's just taking the number of stocks, figuring out the percent rank. And then we look at average rank. And average rank was something I added in. It's basically, you can choose the averaging period, but it's like taking a moving average of that information, because you'll find that it's fairly erratic on a day-to-day basis, and you'll see that in a second. So this, you can choose the averaging period. Could be, by default, it's 5 days, but you can choose it to be 0 or 100 or whatever. And then going one further along, and David, this is kind of answering that question. This rank change is taking the value from the previous day's ranking to today's ranking. So 15.2% in industrial maintenance services. If I was to go to the percent to the average rank and find industrial maintenance services, okay, and we'll see that the value today is it's a 71% ranking today. Yesterday it was 56.1%. The change is 15.2%. So it is the group that had the highest change.
Oh, the change is 1 day, it's not 22 days.
Well, the change is a 1 day movement of the average of 22-day percentage change.
Okay.
Does that, Does that, does that make sense?
Sure.
Yeah.
I don't understand.
Yeah. Okay, and then the acceleration is basically trying to figure out how fast the acceleration is. But I won't talk exactly about the formula for that, and it might need adjusting. But the useful thing you can do with this is right now you're probably thinking, I can see that information in HGSI if I look at the ranking module, right? Are you thinking that? You should be thinking that. The ranking module has similar information in, but the ranking module will show you that information in terms of, well, let's let it calculate, but it's going to use whatever you set into your options here, right, in this case it's using % change 4 weeks. But what it's showing you is essentially red, yellow, and green. So it's very hard to see, like it's useful to know what's the highest rank, but what you probably want, what I think is more useful, is to find out what is actually coming into favor. Because you find that things that are the highest rank don't stay at the highest rank for a long period of time, and things come into and out of favor, and that's the whole idea behind group rotation. So you can try and look at the numbers in HGSI, but I found it very difficult to sort of see how things are moving. So one of the things you can do in EdgeRater now is we'll go to the average rank sheet. So we see at the top of the ranking is healthcare supplies. Okay, 99.52% ranking. It's the highest rank. If I double click on that and bring up that chart over here, turn on this linking thing here, and then select that and make sure I'm looking at line. Right. What you're seeing here is in the top window, you're actually seeing the index itself. One area down, you're seeing the values. So these are your 22-day % change values. The middle of the bottom areas is the average rank. Remember, that's the sheet here called average rank, which is basically trying to average that ranking over 5 days. And then the lower area is showing you the rank change. So now you can see how healthcare supplies became the highest ranked group. All right, you can tell that immediately. You can tell that on September the 15th, for some period of time, it was actually the lowest ranked group. And you can tell that it came into favor around the 25th, and it started to increase, and then it's right now the highest. And if you can quickly scroll through each of these indexes and just take a quick look at how they came to be where they are. So there's a number of things I think you can do with this, and I mean I've put this together. I haven't really had time to go back and look at this, and I'm just hoping people will make use of it. I think there's a lot of valuable information in here, but a couple of things that come to mind are, wouldn't it be useful to know that if the actual value of the percentage change is increasing and yet the ranking is decreasing, doesn't that mean there's a divergence there? That seems to me to be something that might be significant. You could find that in here. The other thing is, how do you find things that are coming into favor? So obviously they start off at a low level and then they're rising. So what I would do here is take my list and I would scroll down to something that might be at sort of you can choose the level, but I'll say 40% or 30%. But I'm looking to find things that are now coming up. They've hit the bottom, they've had that point of inflection, and now they're on the rise. So what I'd have to do here is select the 30%, and I can see that this particular stock, or industry group, is actually still on the way down. It's going down through 30%. I wouldn't say this one has changed at all. But I can then scroll through this list and quickly see, like here, rubber and plastic looks like, it's not a nice looking chart, so maybe it doesn't have a great cyclical effect, but it does look to be increasing right now. And I can just go through these and find the industry groups that I think, or that you think, you can go through and find the ones that are coming back into favor. So that's basically industry group ranking.
Can you go back to that rubber and plastic again?
Yep.
And the top is the index,
The top is the index.
and the second one is the value.
Yeah, the second one is your 22-day percent change.
Take a look where you had two little peaks toward the end. Go to the right, look on your second one there, second chart.
Second peak.
And you see your current day is higher than those two little camel humps, but it isn't reflected on the top, so that's a divergence right there.
Right. Exactly. Yeah, that's what I was kind of thinking, you know, by divergence. And that's not something you can see easily with any program. I think there's more work to be done in this area too, because what whoa.
It was,
now, but what I've got this set to 22 days, so that might not be an interesting time period for you. And obviously, when a lot of people, when they look at technical analysis, you always want to look at multiple time frames. So you want to find your long-term rankings, your medium-term rankings, and your short-term rankings. So, so kind of future for this would be, I could manually do it right now and say, let me run this for, well, say this would be an interesting one. If you say change this to be a 1 day percent change, and I could average it over, I don't need to average it, let's just choose a 1 day percent change and hit run. Okay, so now everything in here is basically what works good on Friday. Would you agree, does it make sense that agricultural chemicals were good on Friday? Were they? Well, they must have been, right? They had the value was 7.64% change on Friday, 1 day percent change in that group. And then if we look at the chart for this, you'll see now how different the chart looks, right? Because now we're looking at a much more changeable chart. We're not doing any averaging, and we're looking at 1 day percentage changes. So you don't really see like the smooth oscillations between the highest rank and the lowest rank. But still, it's interesting to take a look at. But what I think there's value in is taking a longer period of time, maybe a 1 year period, maybe taking a 6 month period and a 3 month period, and maybe a shorter one, and then figuring out cycles within those. And so that's something that is for the future. But right now, this is what we have. I think it's useful information.
Is this in the program now, this template?
This template is fully in the program now.
What's it under?
And it's under Pro Tools. So if you go into the program on the right hand side under, well, let's get rid of this chart for now, and then open up your templates, look under Pro Tools, and then Group Rotation Template. Okay. So most of the categories, I try and put the templates in the categories that are more appropriate.
Actually, I meant the one to build the index.
Yeah, so the one to build the index is not in there. That will be coming next week. It's on this is the development machine. So yeah, that's coming. That's coming. All right. So who thinks that information is useful? Who wouldn't care to? Who doesn't think it's useful? All right. So do you think you could find good industry groups by using this template? Yeah. So maybe it becomes part of your nightly routine is find groups that are coming into favor. And then once you've found the group, you can run exactly the same thing on the stocks within that group. So you might agricultural chemicals. You would need to know what stocks are in that group. Right now, there is no automated way to do that, but that is coming too. But what you could do, obviously, is go to your high growth stock investor, select your group. We'll look in industries and sectors. We'll take a look at agricultural chemicals, and then just export that list because.
A vast virus database has been updated.
Thank you. The only reason I have Avast is because of Paul Reike, by the way. Thank you, Paul. So, yeah, he had a problem with Avast removing EdgeRater at one point. I think that's fixed now, though.
Yeah.
Yeah. So, yeah, so what you would do, because indexes are not, you can't get indexes directly from high growth stock invested database. They don't have a symbol that you can request the information from. So that's the reason that I had to go and build those indexes myself. But for stocks, all the information is in the database, and if you request a stock by symbol, you can grab however much data you want. So it's a lot easier to do with stocks. And all you would do is save your list into the right location, and then you'll find it magically appears in EdgeRater, and then if you just press the update data, you've magically got your list. So this is the list of agricultural chemical stocks, and then you could run the same template over that list, and you find now so the best stock, potash. Sorry, no, that's the biggest change. The best ranked, the highest top ranked stock in there is EBO.
Yeah, that went up 70% Friday.
Yeah, there you go.
Yeah.
Yeah, so it went from basically 140 to
A good friend of
320.
mine bought it at 70% one day. Unfortunately, I didn't do it.
Well, unfortunately, he managed to sell it.
I did sell
Sold it to you,
it. Yeah.
huh? Did he tell you beforehand, Dave?
Actually, he did.
He wasn't that good a friend, you believe me.
Yeah.
Okay, so I'll show you a couple more things that are new in the program. Kind of.
Yeah, Chris, talk about the advantage of your new template for seasonality too.
Yeah, thanks, Ron.
Rather than dealing with the metastyle files.
Yes. So one used for, let me run this template again for the default 22 days. Then we'll get back to where we were. So I'll select my industry groups again, and then I'll change my settings to be back to 22, and run this template again.
No, when you import that,
I don't need to run that template.
that archive file, that just imports the groups, or does it import all the stocks?
So when you save your warehouse file, that has all the information in there that you would ever need from HGSI, because it's got fields for everything. So from that piece of information, EdgeRater can do a whole bunch more things. That's all you need. Yeah, so now you've got that list. And so seasonality was a new thing that's added into the program, and that's been sort of a trendy word recently. A lot of people like the idea of things that have seasonal behavior. I know a lot of people think it's a load of bunk, but certain things do have seasonal behavior, and it makes sense that certain things have seasonal behavior. So the idea behind this set of templates, and it's under the category called annual trends, perhaps I should have called it seasonality, but it's just think annual trends equals seasonality. So say, for instance, I have this list of industry groups, and I want to find what is traditionally, over the last 10 years, what has had a good performance from now over the next 2 weeks, or over the next 1 month, 2 months, 3 months, and so on. I run my historical performance now template, and it gives me exactly that information. So, and I can sort this by, for instance, if you're more of a sort of a medium-term trader, you might be interested in holding something for, say, a 3-month period. So you might be interested in what happens historically between now, October, and 3 months from now. You look in the 3-month column, which is this column here, and you can sort by number of up years versus number of down years. And at the top of the list, airlines, which has had taken a bit of a beating recently, right?
Correct.
Airlines. But you can see that from between now and 3 months from now, over the last 10 years, they've had 9 up years and 1 down year only, with an 11% gain over that time period.
Good information.
Good to know, yeah?
First, 11th year will be down.
Well, there's always the, yeah, so there's always
Don't
the,
always do the first year you try.
right. But this shows you not just the 3-month period, but it will show you the 1 month, 2 months, 3 months, 4 months. So it's actually useful, I think, to take a profile and sort of take a look at the whole line here and say, you know, airlines over the next 2 weeks has had a 9-1 with 3% average. Over 1 month, it's had 5 and 5 with 4%. Over 2 months, a 9-1 with 10%. So you can kind of get a feel for what the good time frame is for that industry group.
Is there an airline ETF?
Yes.
Is there?
Yeah.
So that'd be
One way to play this is to take your ETFs and take the top 4, buy ETFs that affected that for the next buying and holding, whatever period you want to hold them for, 1 month, 2 months, and then redo the deal in a month or 3 months.
Yeah. Yeah, you could do get rid of the ones and then add new ones every month, and try and take advantage of the seasonal effects of those ETFs.
Chris, I've got an idea for you. You can get an ETF for each industry group.
Uh-huh.
And just have them in that template.
Yes. And in fact,
You can't match up everything, but
There are some.
there are some we can do that.
right. And I've got a list in here and you can put any list from HGSI easily into the program, right? So yesterday, when you were talking about major market ETFs, I put those in here too.
Yeah, I've got those in mind.
I got a list of the Canaries, SP 1500, and I've got various iShares ETFs for the sectors and the select sectors. I haven't actually updated those lists, so they don't appear in there.
Yeah, that iShares family would be good.
Yeah. All right, so that's kind of the idea behind seasonality.
Chris, when you normally, when you come out with a new template, somewhere in there you have a educational piece.
Oh, yeah.
Find that.
Right, that's a good question. So all of the templates have, when you look at a template and you look at the top menu piece, there is a help area. So you could say template info, and if I hit that now, it would try and take you to a website telling you more information, or video help, which will take you to the YouTube site, and it will show you the video for seasonality. And I try and do that for every template, and I think some of the earlier ones I don't have that information, but most of the later ones have so if I hit video help, let's sort of cross our fingers and hope that that takes you to something about, yeah, there you go, you have a template, you have video information about annual trends. Okay, and that'll give you a guided video instruction. If you hit template info instead, it should take you to the blog page, and there should be a blog page about annual trends. It's taken a little while to get to there, but anyway, that's how you find that.
Chris, let me interrupt for
Yes.
a minute. Temperature check. Anyone too hot or too cold or just right? Too cold. Thank you, Gina. Gina, we look after you. Okay.
Okay, I don't want to go too long, but I do want to show the work I did with Ian, and I also want to show if you're interested in linear regression analysis. Ian, can we show hands if we go through that? Okay, let me go through that then quickly. It's basically, I find this very interesting, and it was the first template to include a new technique that Mike was responsible for with filtering. So I often get emails from users of the program, and Mike has some great ideas about templates. So let me show you what I put together with this. So by default in the program, there's a list of stocks that have weekly options. I always like to run my templates on that list. There's about 400 odd of those stocks, thanks to Marilyn. See, everyone helps with this. And basically, if you run the template linear regression analysis, it goes and calculates all the values, and then shows you what seems like a lot of information here. Okay? But it's not as bad as you think. So think of each of these columns that are delimited by the solid black vertical line as being a separate time period. So I'm looking at, in this case, columns E through G, I'm looking at linear regression over 5 days. And then it just goes up in its time frame all the way towards the end, where I'm looking at columns W through Y, and I'm looking at 252 trading days, or 1 year, essentially. All right. So that's the gist of it. The thing that Mike pointed out was that there's a great filtering capability that you can easily add to the program, which basically allows you to take any of the columns and hit one of these drop-down arrows, which I've added in, to do any sort of filtering you like. So let me remove these things that don't actually have numbers. Let me actually remove things that are downtrending and things that are flat. And I'll just look at things that over the last year have been going up. And let me sort that by things that have been going up the quickest. All right. So quickly at the top of the list, we have a list now. So now, let me double click on one of these. Brings up a chart. Let me put that over the side. And let's take a look at. Let's just go back a year. All right. So what we're looking at, the red line is your linear regression line. The outer lines, the green line is the upper 2 standard deviation band from that line, and the black line is your 2 standard deviation below. So it should be 2 standard deviations, 94% of the time the stock is within that band, right? And I know, just because this is at the top of the list, I easily know that this stock actually has the best rate of return now based on the slope of that linear regression line. And this is some work that I kind of just did. I didn't really find any references to this, but I wanted to be able to compare those lines, the slopes of those lines, to find out which ones are sloping more steeply. But when you're talking about slope, normally people are talking about, they do a calculation based on the rise over run of the line. And it gives you a value which is basically you can't compare it to other stocks. So instead of that, I've taken this annualized percent approach, which basically says if the line continues at the current rate for another year, what percentage higher will the price be at that point in time? So then you can sort by that, and you can find out the stocks that are actually, sloping the highest. And we can quickly go through this list. And here you can find, this is all your LLUR stocks, LLUR over the last year. Okay, quickly go through these. You'll also notice one of the features is that now the templates, the charts actually show you a layout that's appropriate to the template that you're looking at. So I didn't actually select to show this linear regression line. That is configured in the template.
So it's tied in.
It's tied in, correct. So all you have to do is select it. And if I went over to the next column, which is 189 days and not a 252 days, you'll see that the linear regression line period is now shorter. And if I scroll over to the left-hand side, it gets shorter and shorter, until you get over to this column, which is your 21-day linear regression. You find that the line is sloping down. So it's all about multiple time frame analysis. Which ones have longer term uptrends, which have shorter term downtrends. And I think one of the interesting things that you can do is find the stocks that have long-term uptrend but are trading at the lower range of that standard deviation lower
So you
band.
click on the time frame and it'll pull up that chart,
Exactly.
the linear regression of that time frame.
Yeah, whatever column you're clicking in is going to pull up the linear regression for that time frame. So say you were interested in stocks that have been going up for 252 days in terms of their linear regression. Remember, linear regression is a method of least squares to calculate the line. So it's not an exact line from beginning to end. It takes all of the points in between and it tries to draw the line of best fit using the statistical least squares method.
You're sorting here, what is that list sorted on, which time frame?
So you can do sorting just by clicking on the column, right? So I've clicked on annualized percent in the 252-day column.
So you click on that, okay.
Yeah.
So getting the right chart to come up, you just go to the chart in the upper left-hand corner or something, so you link the template layout.
Correct. Yeah.
So if I got that turned on, it's not linking to it, I got a problem.
Yeah, it should be, but what you should do, try clicking on a different symbol and go back again, because the first time you do it and it brings up the template, it doesn't, it has a little trouble picking it up. So say we were looking for stocks that are trending up over 252 days, but are at the bottom of the band, thinking they're going to turn around. Then you would look for this %B column, which is basically telling you how far price is above the lower band. So I can, rather than sorting here, I can just use my filtering capability and say filter. Things that Ian talked about yesterday was %B buckets report. You saw a few pictures of grandma's pies. The way that Ian gets that information is basically by running this template on the %B buckets report template on the S&P 1500 list. Let me run that. Okay. And that gives us today's view so it's the 17th, so it was Friday. This is how the buckets look as of Friday. And we can see there are 67% of stocks in the S&P 1500 that are below the 0.5, below the mid band, 33% above the mid band. And this is the profile of how those stocks look. So if we go back, we'll hit the previous. Go back a few days to when the market really sold off and see, we can take a look at where we got to. This is an interesting one on the 13th, where we had 83% of the stocks were below the lower band, but the really interesting thing here is I think 37% of securities were below the lower 2 standard deviation volume band.
Correct, yes. Now see if we can't find that 90, Johnny.
There's an 84.
I think it was, are we close? There you are, look at that. All right, this is the picture that I showed, 10-1. 90% are below 0.5 and only 10% are above. And you've got all those statistics from yesterday. I'm not going to go through all that again. But that's a very significant number. The question is, will it hit 90 again? And of course, I like to come forward a week at a time, and we go from 10-1 to 10-8, shall we say? Yeah, there's been an improvement. Now we go to 10-15, and look, not really. There's been a deterioration, and we head on to 17, which was yesterday. Well, 2/3, 1/3. So grandma's pies are a trifle soggy. Not quite, but they are getting that way.
They're getting firmer.
Yeah, that's true. Yeah.
Ian, when you say it's 3 buckets down or 5 buckets up, is that a comparative number? Is it the tallest column that you see there? Is it the percentage of red or green? How do you say, what does 5 buckets up mean?
What does 5 buckets up mean?
So
in effect,
It's the
If I look
index.
at that, and I say there's 6.7 buckets down, is that right? Is that what I would?
So when Ian's talking about that, I believe you're talking about the actual index, right? The index of the
index
S&P
itself,
1500.
Okay,
Percent B of the index.
so it would be 6.7 or round number 7 buckets down,
Well, the index is going to be different. So this is the breadth and essentially the components of the index.
right?
But the index, which is the symbol, would be $SSCO in HGSI.
Oh, it's not shown on the graph. Can you show that picture and show me the column?
buckets doesn't show you.
no,
No,
now
it
we
doesn't
need to
show on
go
this.
to the other piece,
Yeah,
all right?
Yes.
What?
yeah. He can show you that in
It's
another.
one day change that is the most
Yeah.
important point, and you
That was
don't
what I
get
was
that.
asking, was it comparative or is it an absolute value on the chart, so, okay.
Not on those charts, you won't get that. You get this piece
Yeah.
in terms of understanding the strength or weakness of percent B, and particularly since it's being measured against the center line, the halfway point, all right?
Okay.
Now the other piece is, well, we'll have to do the other one, which is.
Which
but
one?
at any rate,
The
This-
easiest way to show it is just to bring up some Bollinger Bands and show the bucket size.
Yeah, that's true, but also, I want to reel David in here in terms of what does it mean when you talk about 5 buckets down?
Right.
But we'll come to that, we haven't done that yet. But now look, this is the other piece. What are you looking at here? What you're looking at here is in fact 9 different indices in terms of their percent B one-day change, their percent B, and their bandwidth, and percent B times bandwidth, and their actual number.
Right.
Now, the two that I use mostly are these two. All right? And as you can see, the color itself tells me we're blood red. And then to get a flavor for what's getting on, this part of it essentially says bulls or bears are fighting like heck. It's, a wibbly wobbly market, and we're not out of the mark. And until, if we could go up, we'll find the other way, going the other, there you are, now look at this. You see, it was all green. And now, the count that you can get, here are in fact 12 drummers drumming. In effect, look, this is all green, so it means that the indices are all up to the upside, and this is down. So that's another way. Now, the twin to this fellow is the percent, which one is it now? Percent B buckets?
You want bandwidth or percent B times bandwidth?
Let's have some give me templates like a good
Oh,
song.
okay, sure.
Now, we want to go with, where are we here? Percent B buckets, isn't that it?
The one we just looked at.
Oh,
that's-
no, then where is the Pat Turner piece? Where you go up and down?
Oh, so
This isn't in the order that I have it.
no, well, you can change the order. Everyone can change the order, so I probably have it different to you. But if I go back to percent B, the buckets report, and then you look at the point score.
Oh, it's
point
right
score.
here, for
Yeah.
Pete's sake, we want it right here. I'm so sorry, percent B buckets, hit that, Johnny. Now trot down,
Yeah.
all right?
There we go.
And there you see, again, the number, the percentage of stocks in each of these buckets. Now, the thing you're looking for then is how does it change relative to moving up or percent B moving up or down on one day? And that is that in here? I have to put it into the Pat Turner file.
Mm-hmm.
No, it's not in here, I beg pardon. What I do is transfer this line, last line's information on a daily basis to see how percent B is moving up and down.
But this sheet here is actually the point score chart. Will you'll see the blue line here is your SSCO, that's your S&P, that's the index
That's the 15.
of the 1500. But the black line is actually %B of SSCO. And then the green and the red is the point score of the actual components. So here you can directly compare, the %B of your index versus the number of components within that index that are above or below 0.5 or whatever band they're in.
Okay, put your
Show the
cursor
right-
on any one of those vertical lines in the histogram.
Yeah, okay.
All right, any one of them. Just, can you identify the readings for each one of those?
Yes, in other words, you have to close this, Johnny. And here we are, you see?
Okay.
So, let's try it here. Let's try this fellow, right?
Yeah,
Just
but
as a for instance.
You're not going to see the indicator here, but anytime you run a template, it actually puts an Excel file out too.
Yeah.
So you can open it in Excel. You can see the exact values within. Oh, it's not that
Okay,
one.
where is that value?
Yeah,
I
let me
have
show
been
you.
searching for this for 10 years.
Oh, 10 years. That's before I even. Okay.
That was actually an Excel template before Chris. So,
Yeah.
Yes,
So
you
the values. This chart is built in Excel, but it's built from the point score worksheet. So all the values actually come from this worksheet here.
okay, for 1017,
Yeah.
are we buckets up or buckets down? And how many? And how do you tell?
I'll show you later.
Okay, every time. I get it's complicated.
I manually create a chart every day, like the one Ian has with square zigzag down there. I do that every day on an Excel spreadsheet, and I get it from Chris's work right there.
Okay.
That's right, you
You
see?
can see it move 3 buckets, 4
Okay.
buckets.
Now,
Yeah.
I'll show you.
okay, thank you.
You can also kind of see from here, like if you take the very last values, right, 1017 and then 1015, you can see that actually SSCO went from a %B of minus, a value up to a higher value. So it was definitely up in terms of %B on the index. All right.
You have to remember one thing about Bollinger Bands, they expand and contract, so that really affects the buckets too.
Right.
On a real wide, like a sell-off,
Right,
it has to move a lot more.
right.
Yeah.
So that leads to one more point. Somebody asked me, what's the value of %B times bandwidth? And he isn't here. He's gone. What's his name? Forget.
Oh, Brad?
Brad is gone.
He wasn't feeling well.
Look, if you look at it this way, you know that bandwidth stays very, very tight. All right? While %B is, as you know, oscillating like this. I've shown you that enough times, right? Now, if you take %B times bandwidth, and the bandwidth is, in fact, tight, and %B is oscillating up and down, it dampens that oscillation. Now, think of this. When, in fact, the %B gets a whoosh in terms of a move, and the bandwidth goes from a bandwidth squeeze to a whoosh upwards, then it exaggerates the problem. And the same thing happens on the downside. And the downside is the one that I find the most value because it gives us of the order, I won't say all of this, but of the order of 3 days to 5 days in advance of the VIX. I mean, you know darn well that the VIX shot up to 27 and then 31, right, the other day? I'm saying if you take %B times bandwidth, you will find that it will be signaling that move because it's exaggerated. Bandwidth is increasing and %B is increasing.
And this shows this here, right? If you look on the right-hand side, percent V times bandwidth,
Oh, there you are.
you see it goes red way before your bandwidth starts to, and bandwidth is the second column in, and then that starts to get quite wide
Right.
sometime after.
Here's bandwidth increasing substantially, right?
Right.
And percent V times bandwidth beats it.
Yeah.
And there you are.
And the interesting thing is that we've been in a period of basically looking at bandwidth like, nothing really major. For a long time, you get the occasional yellow, but we've just got back to a point of yellow again over here. So percent V times bandwidth is red already, so we may be coming into a...
So, good point. Thank God you saved my bacon here with this chart, all right? Because I have to put it into Pat Turner's chart, right? See, when you begin to see these yellows here, that's the time to watch out. Because bandwidth now all of a sudden has gone from the 0.02 to 0.110. Notice that the 1500, which is the SSCO, is lagging a little bit, but they're all at 0.9, 0.09, and the average, composite average is 0.10.
Yeah, one more tick it will be yellow.
That's right. So, that's the value of the Woody indicator, percent V times bandwidth, is the exaggeration that you get, and it is therefore particularly useful on the VIX. Both ways. Because it will come down or it will go up. And the one you're looking for is the violent one up. You don't care if the darn bandwidth is, getting tighter and tighter and to 0.02s and 01s. You love that. You'll take those. But it's when it's getting here that it's now almost close to oscillation. And that, coupled with the percent V, then exaggerates the whole thing. Right. I hope you got it, right?
Chris, can you pull up HGS Investor in the T1 feed, my first one, in the first folder?
Yes,
I want Ian to bring up the major market indexes.
Major market indexes. Major market indexes.
Under Word, right?
Yeah.
So there's more of them. Yeah, right. Major markets plus, the top. Okay, we don't have any these kinds of bandwidth that are purple anymore, right, Ian?
That's right. I mean, there's nothing that's gone dark red. But if you've gone back a few days, well, I showed you that chart, for Pete's sake, in my presentation yesterday, when I showed you, look what happened where we were up and down 9 buckets and down 6 buckets in these indices. That thing was blood red.
Everything was oversold.
No, I don't believe you, Ian. We have to digress for a minute just to drive this down point home. Is there any way we can, we can't do it here. We can't get you quickly to Woodward's charts, back end.
Woodward shots? On
My presentation of yesterday.
If you want to see something recent, you have a link to that OneNote. Because I put that in there every day. We call it. If you want recent history.
let's see all my... okay, don't read my email.
I want to see that particular day. When I saw that, I said, wow, are we in trouble?
What was that email from Florida I saw there?
Thank you, Ron. All right, too many people know about something. Okay. Which one though? The Fridays one?
Well, a couple of, we can go to Ian's chart. I just want to show what that looks like. It's extremely oversold. It wouldn't be Friday, it would be, go back to the 14th.
It was that day when we had a 90 versus 10.
Well, that was clear back in the first. No, I don't know. Okay, scroll down several. Here it is, that right there.
Percent B times bandwidth. When you see that blood red like this, is this the Johnny? Look at, we then got to go over to percent B times, what is this thing? 1 day change?
That's just volume, percent B.
Percent B.
Yeah.
And which is this?
Okay, no, it is 1 day change, you're right.
1 day change.
You can't see the
Well, you see,
time.
on this particular day, it wasn't that much of a problem.
Well,
I gotta drive it home, otherwise these people are gonna say, come on, a lot of words. Let's hammer it so that I pull Brother David in.
Okay.
You gotta get me to my presentation of yesterday.
But on that, see where I put the box in where it says over.
Yeah, look, he's got it there, all right?
Because
It's blood red. Percent B times bandwidth is dark
Kind of
purple.
a purple, isn't it?
Purple, reddish purple.
Well, Chris can't pull it up unless he pulls up the PDF file.
Yeah, well, I might have it. Let's
It'll
see.
be on your thumb drive.
Knowing Chris, he'll get us there in 2 seconds.
Oh, don't say that. It's too much pressure.
2 seconds.
Okay.
Where the heck is Woodward?
I'm sorry, that's not it.
It's not here.
Where's my, Ian's presentation?
Yeah.
Look, the fourth one down, isn't it?
Fourth one?
Next
One
one
more,
down.
one more.
Next one down.
There you go.
That's what.
Hit that,
Hit that, Johnny.
hit that, Johnny. And let's trot down to past chart number 60 for sure. All right, because it was the second half. And this was where all the fun was. Okay, we've now hit 60. Have we hit 60? Let's trot on down because it's a lot further.
You know the title of the slide?
No, go up now. Now you're at the bottom, aren't you?
Yeah.
All right, so,
This?
no. Well, that's one. All right, now,
Yeah.
David,
That's- yeah.
this
That's
comes from Pat Turner giving me that thing which I stick in manually, all right? Follow, there's your buckets down. 1 day bucket of yesterday was brutal with 6.2 buckets down. And today the indices continue to slide down. All right? And you can see those. Look, here was a whipsaw. But here we trotted all the way back and then wow, the bulls got walloped. And by the way, I'll tell you, where was Brother Gill? No, I shouldn't have said that, but I'll say it anyway. Where was Gill at this point in time? He hopped back in here, for Pete's sake, and then he was quick enough to know that he better hop out, and therefore he went negative. He knows what he's doing. But now let's trot down or up, is it, and find my other beast. Go up further. No. What's the matter with
You
this?
know what it's called, Ian?
You want to go to
You
your
can do a
What is
control
it?
F.
16?
16?
That's where you want to go.
Is that all the way? Oh, yes, yes, 20. Here we are. Isn't this it? No. I want this, Johnny.
What are you pointing at?
Tony.
20.
Look at it. 0925. 6 market indices down between minus 5.3 and 9.3 in 1 day. Here they are. Look. Count them. Minus 5, 2, 3, 4, 5, 6. In 1 day. Look at this. Percent B times bandwidth. When I saw that, I said, that is the day. 925. I gave it to you. Why? Because of this whoosh that happens. Look at it. I mean, what is this? That's the stocks. What is this, Johnny? The NASDAQ 100, of course. That's when the NASDAQ 100 got walloped. What's this, Johnny? The S&P 100, minus 0.85. That's 8.5 buckets down. They were hammering the heck out of it. And we didn't wake up until about 2 weeks later. Right? That's the significance. This, Johnny, is very important when the floodgates open, is my point. That's all. And one exhibit of that is this business of how many buckets down in one day, or up. And as I said, there were only, what was it, 6 in 6 years, so 1 a year or something like that. It's also on the charts. You know that.
Chris?
Yeah.
Would you bring a chart up with the Bollinger Bands on it and go to 925? Can you do that?
I don't know, it means using HGSI and I guess I know some things. Let me see. Alt space, that gets me there.
No, you were there.
Oh, what?
You were in the right spot. I wanted an index chart.
Okay. Can I go back?
This is the NASDAQ.
Or I'll go back to the major markets plus. And you want
Bring up the NASDAQ.
composite?
Yeah, what was the reading that day for the NASDAQ?
923.
You mean
Yeah.
which reading? The
Well,
close? 4258?
times the bandwidth.
Oh,
Okay, let's close the fundamental chart. Part
okay. I believe I can do that.
and zoom in on that.
Okay.
Make the chart, yeah, there you go.
And what chart would you like to see?
The NASDAQ. I want to look at,
Quick pick. What chart?
okay, I want Ian's multiple chart just because it has the Bollinger Bands on it.
Yeah.
And let's zoom in on that.
Okay.
I think David still wants to know what these buckets are.
I'm assuming the spreadsheet's gonna solve it, but I don't know yet.
Okay, so what was the date, 925, Ian?
923, wasn't it?
925.
25?
Right there. This red one here.
Okay, so on that big red candle, you can see that the bands are widening substantially, starting to.
Yeah.
And what that candle is doing is encompassing that number of buckets, or those buckets. And the buckets are based upon the Bollinger Band, broken into 10 segments, right, Ian?
Yes.
So it's, when there is...
12, actually. 12.
12, yeah.
All right.
Over and under. So when it goes through 6, what were those, 6 buckets down or 8 buckets down?
Anything from 6 to 12 buckets down. Yes, 6 buckets down.
It just means that that daily range encompass those
Okay,
segments
Ron, I
of the
see a
day.
wide range bar. I understand that it went below the lower band. I understand that it traveled a certain distance in a negative direction.
Right.
How do I measure that direction other than keeping the spreadsheet that we got back here?
Well, if you
Showed
take...
you on the warehouse before.
If you go back to the warehouse,
If you take the close of the prior day to the close of that candle, that will tell you how far that traveled, and that will represent the number of buckets.
Okay, that's what I needed to know.
Yeah, that's what it is. It's close to close, and the distance will represent the number of buckets
On that day, right?
on
So
that day.
this column here, percent B 1 day change, right? Which on Friday was 0.1168, which is just over 1 bucket on Friday.
Right.
Don't you have in your spreadsheet, don't you have the number for each one of the percent D buckets on a daily basis?
Yep, in here.
So you can calculate automatically the change in buckets on the overall period by just adding them up and subtracting the date, previous date's difference.
Yeah, in fact, the first column here is all about the 1 day change for percent B.
Yeah.
And when you see a line, a red line across here, it means all of the major market indexes are.
Yeah, but you can get, in the case of your 8-day down buckets,
Yeah, it would be colored red, and it would be a 0.8 in there. Yep.
Now, one more thing before we finish, bring that, do you have that chart still open?
Of course, I never close something when I open it.
Okay. Now, see, the bands are extremely far apart now. You can see that. Kind of. There to there. Now, for the buckets to make a dramatic 6 bucket up move, they're going to have to move a lot further now than they did when it occurred before, because the volatility is increased so much.
Like from here, from today, it's going to have to go up to like here.
Right. Yes, there's truth to that, of course.
So it would be much more dramatic now if we had a 6 bucket up.
That's right. Exactly.
So you have to take that volatility into consideration.
Which is the bandwidth.
Taking the time to do it.
No, but one more point, just to drive, come on, Ian's got the kitchen sink in here. Well, where do you want to look? Right there, for Pete's sake. Look, green, yellow, red, and there's the jolly old beastie, and it kills it, it says it, right there. Now, do the same like a good soul on Brother Code Blue, because I am hooked with I'm to get at the hip with Brother our friend. Gil.
Brother Code Blue, you went Code Blue on here.
No. My charts.
He
Ah,
wants his chart in his folder.
Golly.
In Ian's classic woodwork. Top chart. There you go.
And where's 925, was it? Here, must be.